Welcome to the deep dive. We've gone through your sources, like today's Washington Post, to distill exactly what you need to know about where finance, markets, and state power are headed.
That's right. And our mission here is to cut through the noise, to look at these major stories purely through an economic lens. Today, we're tracking three big things for you.
Okay, what are they?
First, a real sense of caution in the U.S. economy. Then we'll get into how the state is using policy to create some clear winners and losers. And finally, the growing financial risks tied directly to global conflict.
All right, let's jump straight into that first one, the U.S. economy. The sources we're looking at suggest a pretty distinct chill is setting in.
It is. And it's coming from the tech sector, which for years was just this massive tailwind for job growth.
And now it's a headwind.
Unequivocally a headwind. We're seeing what's being called a jobs recession there. The industry's jobless rate actually climbed to 4% in November.
And that corporate caution seems to be mirroring what's happening with consumers.
It absolutely is. You have these high prices. I mean, the average new car is now over $50,000, and you combine that with high interest rates. People are just slamming the brakes on big purchases.
But it's not just the market, is it? Policy is playing a huge role here.
A huge role. Take the EV market. The expiration of that, that $7,500 federal tax credit. It hit so hard that Ford's electric vehicle sales plunged 60% last month.
60%.
60. That's policy immediately translating into lost sales.
Okay, so that's consumers reacting. But you mentioned the government itself is defining winners and losers. Let's pivot to that, starting with the push for federal downsizing, specifically at the EPA.
Right. This is one of those classic cases where a drive for sort of long-term efficiency comes with these massive politically charged upfront costs.
What kind of costs are we talking about?
The EPA spent over, $86.5 million just on compensation for more than 2,600 employees they placed on extended administrative leave.
Wait, so let me get this straight. Taxpayers paid almost $90 million for these employees not to work.
That's the short-term cost, yes.
Yeah.
The administration is hoping for a projected $750 million in annual savings down the line. But it is a huge political gamble.
And I imagine the unions have something to say about it.
Of course, they're arguing this leave is being weaponized as a political tool.
Yeah.
Now, if you contrast that fiscal cost with something that is a pure corporate gain.
You're talking about cannabis.
Exactly. The push to move cannabis to Schedule 3.
So what's the financial payoff there? What does that policy shift actually do for these businesses?
It's a huge tax windfall. I mean, moving it from Schedule I down to Schedule 3 means it's recognized as having lower abuse potential. But the key thing, the financial part, is that it allows marijuana businesses to finally claim major corporate deductions. Things like rent, payroll, marketing, normal business expenses that were blocked before.
So it immediately unlocks millions for these companies, even while the recreational side of the industry is still federally illegal. Okay, so let's zoom out from domestic policy to international finance. Frozen capital is becoming a major geopolitical weapon.
It really is. The EU is urgently planning to use frozen Russian central bank assets as collateral for loans to Ukraine.
And that urgency is directly tied to the fact that the U.S. has stopped its direct funding to Kyiv.
Correct. And if we connect this to the bigger picture, this is an incredibly high-stakes financial move, especially for Belgium.
Why Belgium specifically?
Because that's where most of these sovereign assets are actually held, at a financial institution called Euroclear. And Belgian officials are, they're strongly opposing this plan. They're terrified of Russian retaliation.
What kind of retaliation are they actually bracing for?
We're expecting a jump in what's called hybrid warfare. So in this context, that means coordinated cyber attacks, specifically targeting their banking systems, their critical financial infrastructure.
So frozen capital is now a front line in state security.
Without a doubt. It forces a country like Belgium to bear all this direct security risk for holding assets they can't even control.
So wrapping this all up, what's the takeaway for you? The sources show this really complex system. You have a cautious consumer at home, these politically charged trade-offs on government efficiency, and then this weaponization of finance abroad.
And that brings up a really important question about the long-term outlook.
Yeah.
We saw data that AI investment now accounts for, 1.5% of GDP?
Right, and people are comparing that to the railroad boom of the 1870s.
Exactly. And while that comparison suggests, future infrastructural gains, it should also serve as a pretty sharp reminder for you.
A reminder of what?
That technological transformations of that scale, they are always accompanied by massive booms, busts, and the fall of very established corporations. That's the kind of volatility you should be bracing for as all this new investment starts to play out.